We are no longer in a housing shortage. I've been talking about a housing shortage for so long, but officially the supply number has hit balance at 100. This is the first time in 14 years that we have seen this number. So what does that mean for the market here in Phoenix? We're going to talk about that today. Plus, there is some home buyer remorse out there. So we'll get into that as well. So let's get started. I first want to show you this table here of the Cromford Market Index. If you've been following my channel, you know I'm a subscriber to the Cromford Report that gives us such great information about what's going on in Phoenix. And this is their latest table of all of the major cities and their respective CMI. Now, as we've been seeing, there's a lot of red arrows. And a few weeks back, we were actually seeing some progress towards a more balanced market or a seller's market. The last 2 weeks, that has not been the case. In fact, the average change in the CMI has been negative 2.7% month over month. Last week, it was negative 1.9% month over month. So we are seeing some acceleration in the direction towards a buyer's market. Many of these cities have red arrows indicating that month over month, they have gone away from a seller's market and more towards a buyer's market. Chandler's still technically in a seller's market at 140, but it has been losing steam, as is Paradise Valley and Scottsdale and Gilbert and Fountain Hills. As we get to Avondale and Phoenix, those are on the cusp heading into a balanced market. And then we have a whole group in a buyer's market down there at the bottom. But what I want to share is what the Cromford Report is actually saying. It's the first time since May 29th of 2011, almost 14 years ago, that we have actually seen supply reach 100 on the CMI. So 100 is balanced. It's normal. It is where we need to be with the supply of housing in our area. And for the longest time, we have been undersupplied, not only here in Phoenix, but we talk about this on a national scale. We are short 4 million homes, et cetera, et cetera. So here in Phoenix, we've actually caught up based on the number of active listings that we have. And I'm going to show you what that looks like here in a second. It says it's fair to say we no longer have a housing shortage. It's also fair to say we would not have an excess supply if it were not for demand being weaker than normal. So it's important to realize that there's two factors here. It's not just the fact that we have normal supply, because we don't have excessive supply. We just have normal supply. However, we get an excess because demand does not meet that. And so where we're seeing low demand and we see supply rising to normal, that gives us essentially an excess of housing supply, but it's because the demand is lower. Hopefully that makes sense. So if you want to see what this looks like here on these dials, you can see supply finally hitting 100 and our demand at 80, so about 20% below normal. The overall market index being 79.9. If you're new here, they say that anything under 90 is considered a buyer's market. So throughout the valley, we are in a buyer's market technically. Now, as I showed, there are some cities that are still in a seller's market, but broadly across Phoenix, we are in a buyer's market. Now, they go on to say the table's still reporting a swing in favor of buyers, and the swing has started to move faster again. 13 cities have deteriorated for sellers over the last month. 4 have improved. Avondale is the only city with a high percentage of improvement of 12%. They say that the overall measure of demand is about 19% below normal, like I was just sharing. The implication is there are about 24% more homes for sale than we need for the present number of buyers active in the market. Given that we're in the middle of the peak buying season, this is a serious concern. I don't like when the Cromford Report says anything about a serious concern or a worry, because they're usually fairly positive as they look at the data and can say it's reasonable to expect this type of outcome based on these things in the next, in the near term. It's usually a fairly positive prediction, and this doesn't sound so rosy. They say it's a good time to be a buyer from the point of view of negotiation power, but buyers tend to lose motivation as they start to sense prices in decline. So right now we're not seeing prices decline yet, but we are seeing indications that we could get there because we are seeing higher supply, lower demand, we're seeing price reductions, and we're seeing sellers provide concessions. Typically what comes after that is you start to see the actual closing prices come down. They say that there is now a danger that we might enter a negative feedback loop with a deflationary cycle taking hold. Confidence that they are not paying too high, meaning buyers not paying too high a price, is a strong element of a buyer's positive mentality. We're now in more danger of losing that confidence than we have been in the last 15 years. They say, of course, significantly lower mortgage rates could help the situation, but there is no promise that we will actually get there. So let's see what these active listings look like. We've been following this every single week, and while it doesn't look too crazy on this graph, I'm going to compare it to 2011 so you can see where we had been in the past. So here's where we're at today, about 25,000 active listings. Remember back in 2008, 2007, when everything went haywire, we had about 50,000 listings. So we're still half of that. But as we look at the past few years, obviously, active listings much higher than they've been the past few years. You have to go, if you tick all of these boxes, you'll find that all of the years are lower. Go to 2012, it aligns with where we're at or have been in the last few years, but then 2011 is where the trend breaks. So you can see as we ended the year, in 2011, it was about 25,000 active listings on the market, very close to where we're at today. We had higher than that when we started the year of 2011. Regardless, we have to go back 14 years to see this level of supply in our market. Now, like I said, there are two sides to this coin because you could have this number of active listings, but you could also have really high demand. Therefore, you're not going to see a buyer's market. However, the fact that we have this demand that isn't really keeping up is creating this excess supply and putting us into a buyer's market. Now, the listings under contract is another thing that we've been taking a look at because this is essentially our buyer demand. And while this year doesn't look to be too far off, it's the red line, following the trend of 2024 and not too far off of 2023, we have to remember that our listings are significantly higher this year than they were last year. So here we are in 2024, 2023, obviously the number of listings on the market much lower than where we're at today. We were at 17,000 last year and 13,000 back in 2023. So although we're seeing the listings under contract following the same pace, we have way more listings and obviously not getting enough under contract to bring this into a balanced or even a seller's market. Now, if you are a seller considering getting on the market, I know this isn't the best news for you, but it might be helpful to know what the active listing inventory looks like in your zip code. So check the description below. You can request that information directly. You can also get an instant home value just to see what value your home might be able to sell for. Now, as I mentioned, we're seeing some of those indicators that the market is actually weakening. Price changes per week or price cuts is one of those things that we're looking at. Although there hasn't really been too much of a trend the last few weeks, this has remained fairly high, showing that we are seeing consistent price cuts on a weekly basis. This is not the final sales price or anything like that. This is just listings that are taking price reductions while they're on the market, obviously in hopes to bring in more interested buyers. Now, the number of sales with seller concessions is pretty high. It's about 50%. This is over the last few months. We've hung around 50%. We were a little bit higher towards the end of last year. Pretty typical, but this has not gone down very much. We're still seeing sellers giving concessions, very common, very frequently. So that's something to keep in mind as a seller, to know that when you receive an offer, very likely that they're going to be asking for some form of seller concession. And as a buyer, good to know that this is common to see, and you can definitely negotiate this into a contract. Now, as a buyer, we're obviously paying attention to rates. That's a super important thing for the most part, for most of us who are not using cash to buy a home. So what's going on with rates? Let's talk about it. So last week, the PCE came out. This is core inflation information. It hit 2.8%. It hits 2.8% higher than expected, and spending increased 0.4%. Now, is this a big deal? It really wasn't a huge deal. It didn't impact markets all that much. Federal Reserve officials focus on the PCE inflation readings as they consider it a broader measure that also adjusts for changes in consumer behavior. It looks like a wait and see Fed still has more waiting to do. So it wasn't really moving markets all that much. In fact, the Fed has been a little bit more concerned about the labor market rather than inflation as of late. So this didn't change things all that much. However, tariffs is another thing that is on the Fed's radar and creating a little bit of hesitation. Basically, there's a lot of concern around how tariffs could affect inflation. And with that being a very important piece of what the Fed looks at, obviously, right now, as I said, it hasn't been as concerning, but tariffs could change that. They say while you can't predict when the U.S. central bank might change the current level of interest rates, keeping it in place for some time will allow officials to study incoming data and decide what they need to do next. So long story short, there's just a lot of uncertainty. The Fed seems to be comfortable where they're at right now, not thinking about cutting rates, not thinking about hiking rates. Therefore, that's not changing things too much with interest rates, with mortgage rates at the moment. However, federal funds rate is not the mortgage interest rate. So we still see fluctuation in the mortgage rates when things take place in the markets. And as we learn more about tariffs and that kind of thing, that is likely going to affect mortgage rates as well. As of earlier this week, mortgage rates inch lower but remain broadly sideways. That's been the dominant theme for mortgage rates for well over a month. We had a lot of movement about a month ago, came out of the sevens into the high sixes, and then have just pretty much stayed sideways. So where we're at today, about 6.71%. Really not too much of a difference over the last month. So if you are a buyer out there, always good to connect with a lender who can give you a good idea of how this would affect your monthly payment. There's also the option of getting an assumable mortgage. So this is something that my team has been helping a few buyers with right now. If you have any interest in this, check the description below. We have a list of homes with assumable mortgages as well as a guide on how all of that works. Now, I said that there is some buyer remorse out there. Before we jump into that, if any of this is helpful for you, make sure to consider subscribing and share this video with someone who would find it helpful. Most Gen Z sellers have regrets over pandemic home purchases. 5 years after the arrival of COVID in the US, 94% of Gen Z and 86% of millennial first-time home sellers say they regret their pandemic era purchase. This is according to some analysis by Open Door. Obviously, back during that time, competition was fierce. You had to pay over asking, waive contingencies. It was kind of a crazy time. Unfortunately, many buyers rushed into decisions. They're now catching up with them. 79% of first-time sellers surveyed admitted to making mistakes, and 91% said those mistakes influenced their decision to sell. So is this helpful to know that, maybe we'll see more inventory coming from these buyer remorse Gen Z and millennial sellers? Maybe that's one of the reasons why we're starting to see more inventory on the market. I still think that lock-in effect has a big effect on people not selling their home if they don't have to. But it sounds like many Gen Z sellers realize they purchased too soon or failed to consider long-term lifestyle fit. Millennials, on the other hand, were more impacted by the financial factors, underestimating maintenance costs, overlooking inflation and interest rates. Across all generations, financial uncertainty and the fleeting nature of remote work added to the challenges. I know there's a lot of places that have done this back to office stuff. And so a lot of people have had to move back to the city or closer to their office location, which has also affected the housing market. So pretty interesting stuff. While again, we have more listings on the market, part of that is because the demand isn't there either. So I don't know if that is affecting the inventory increase that we're seeing, or if it's more so that the demand isn't keeping up with the inventory increase, probably a combination of both. Now, I always like to look at the contract ratio because this is a really good way to see what's going on in the market. The way that the Cromford report defines, we're here today at 36.6 overall in the Phoenix area. 36.6 falls in between cold and hot, so I would assume that is probably warm. It looks like they're doing some updates to their site, so you can't see that right now. But overall in a warmer market. Now, every zip code a little bit different. We see a lot of cool zip codes in these blue areas in Central Phoenix and Scottsdale. And then we have some warmer areas, North Phoenix, the West Valley a little bit, and North Scottsdale. So this is really great information if you are someone considering either buying or selling, to know what's going on in your area in terms of the number of active listings as compared to the number of listings that are under contract. So if you want more information on the contract ratio in your zip code, check the description below to get that information. Thanks for joining me, you guys. I will see you all next week with my next market update.